All right, Francesco, welcome to the dirt.
Well, thanks, Jim, for having me. Happy to be here.
Happy to have you here. So let's do a little rewind here for a second. Back to your foray into this world that we call entrepreneurship. Talk to me a little bit about how that experience or your experience in general shaped your path towards and into entrepreneurship.
Yeah, it's a good question. It goes way back, I think, into my childhood and youth, where I loved to sell lemonades by the street. And I think it really started to take some more form and shape during my undergrads, where I was always driven by the spirit of, or the idea of, entrepreneurship being a vehicle to change the world. That sounds maybe a little bit ambitious, but make some impact in the world, and to make it a little bit better every day. And so I tried different kind of approaches to get there and have my form of impact. And I think mostly unsuccessful during undergrads. Started a first little venture and for recruiting, and realized, oh no, recruiting is not really the space I feel like I should spend, or I want to spend the next 5 to 10 years of my life. And so after that, during my time at MIT, I attended a bunch of these entrepreneurial startup pitch contests together with my co-founder at the time. And we were lucky to actually win a few of them across MIT and Harvard. And so it was a good, I think kind of next evolution here of learning how to pitch an idea. But also there, we realized after going through that whole process that it doesn't stop with the pitch, right? It really only starts there, and you have to find a real problem that you can solve for people in the world in order to make an impact. And so, I think that's kind of long story short, led me to co-found Kyte, where I'm very happy and glad that we finally found a problem to solve, and we can actually help people to get to places, right? Help people to go places.
Yeah, so these pitch competitions that you won, were these with Kyte, which we'll get to what Kyte is in a second. Hold on. I know everyone's kind of at the edge of their seat trying to figure out what is Kyte. If they haven't already been a user, of course. But was this for Kyte, or was this for the recruiting business? What was this pitch competition?
This was even a third kind of avenue.
Oh.
I did my master's in logistics, and so it was a logistics company for refrigerated transport in developing countries. And so that was the idea.
So you had this venture into recruiting. It was a good idea, but realized that you didn't really love it. You had this venture into the logistics business. It was a great idea, but maybe not what the world was craving for. And so kind of the mixture of those experiences led you into starting Kyte, which the world is craving, and is craving quite a bit, I'll say. I mean, this shared mobility and the way that you guys are changing the nature of what renting a car is. And I won't spoil the news. I'll let you speak to it. But so what is Kyte? How did you end up there? And what are you guys doing to change the world?
Yeah, good question. And thanks for all the kind words. I still think for us it's still day one, but we can talk more about that in a few minutes. So rewinding, what is it, 4.5 years back now? Both my co-founders and I were looking at the mobility space. We knew already that we all were super passionate about the mobility space at the time. And if you remember, back in the days, these were the hype days of micromobility. Lime, Bird, like all these scooter companies were like super hyped. Uber was big already, right? And so we like realized that like the inner city transport landscape was basically figured out. And what wasn't figured out was everything longer than an Uber ride, right? So people like living in a city, like fewer and fewer of them have cars, do own cars. And so they are using Ubers to get around town. But then if you like, need to get out of town, that's where you still need a car. And that's where there were some solutions already in place. You can get a traditional like rental car with any of the established players. There's like peer-to-peer, and there's car ownership as a third alternative always, right? But each of them comes with their like very unique downsides of, I don't know, like I don't even want to ask you, but I kind of do. It's like if you think about your last like couple of car rental experiences, like was there any experience that like was subpar and wasn't great? And if you ask that like to most people, they have at least like one experience that wasn't that great, right? And so
I've got dozens. There's a reason I haven't even rented a car in probably 15 years.
Oh wow. Okay.
I hate to drive, so I'm probably not the best judgment here, but because I'm not a big driver anyways. But yes, miserable times renting a car for business travel, personal travel across the board. Uber saved my life. Maybe Kyte will now save my life though.
yes, in the future. Yes, definitely.
Yeah.
So yeah, I think, yeah. So like, if you think about that, right, like there was this landscape and they kind of had all their downsides, either being not customer centric, traditional car rental companies, like not being consistent in the experience. If you think of like peer-to-peer car sharing options out there, or just like super unflexible if you think about car ownership and like 3-year plus leasing models. And so we thought like there must be something there where we can actually create a solution to give people access to a car for any trip longer than a rideshare, and like do that on demand by delivering a car to people's door and when they need one, right? And then when they're done, make it kind of like magically disappear again. And so with that idea in mind, kind of like think of it as a virtual garage that you have in your pocket with the Kyte app, right? Like you can always pull out a car of your virtual garage when you need one and make it go back in there. That's kind of the initial idea, and today the core of what we do at Kyte.
So we jumped into your path into entrepreneurship, but what we didn't really talk about is your role at BMW, which kind of I'm not going to speak for you, but kind of led to a lot of this influence of mobility in your world and knowledge transfer in terms of understanding the landscape and things. So, how did your role at BMW influence your decision to start Kyte? Because I know there's a lot of other folks out there. They're in a big company environment, right? They're like, this isn't for me, but I need something that's going to jolt me into starting my own business. What was it for you that was that jolt?
It's a good question. So I think I'm not sure if I'm a good example here, because already like going into BMW, I knew this was not going to be my like retirement kind of job, right? And so it was more like I saw, and I deliberately took that decision to go and join this huge company. And after like graduating, in order to learn how a company can work at scale. And so I think that like it fulfilled its job quite well there, like where I saw like the good things of like a big company working at scale, having massive impact, right? Just like because of its size. But then also, of course, like things that didn't work on a bunch of different levels, from like company structure, efficiency, but then also digging deeper into this like car sharing model on the content side. I think like in terms of like doing the jump then, right? Like at some point, I decided that I would go for it. And funny enough, we, at the time, we were already, like the three of us, we were already discussing an idea, which wasn't Kyte. And I was so sure this would be the idea, to go with. And I was like, okay, now I'm ready to quit. It turns out after quitting, like 3 months later, we're like, okay, no, this wasn't it. Like, let's pivot, right? Let's do something else in the same space still, but like it was definitely not that trigger.
So when you look at BMW and all these other bigger manufacturers, autonomous cars, general as a keyword has been a topic of a lot of conversations, and I'm just curious, like, how do you see Kyte fitting into a world with autonomous cars?
Yes, I think we actually asked ourselves that question very early on, and autonomous cars have been around for a long time at this point, actually, right? Like at least we've talked about them for a long time, and after billions and billions of dollars investment into the technology, we're still at a kind of small scale level and only slowly starting to see like the cruises hit the ground and Waymos hit the ground with their first real people in real cars without a driver. So I think just like looking backward, we have seen that this timeline has taken much longer than initially anticipated, and I think it can still grow exponentially, right? And so there might be kind of a takeoff coming in ahead of us, but we don't expect it to be like every car driving fully autonomously tomorrow. And instead, there will likely be a kind of transition phase where you can have things like teleoperated cars, which are like cars that drive without a driver in the car, but they have a driver remotely sitting somewhere and steering a car, right? Like kind of remote control driving the car. And something like that is like easier, like significantly easier to actually do technologically. And at the same time, it kind of forms this transitory step on the way to full autonomy. So we're seeing a couple of startups doing that. And I think once that has formed a little or reached a little bit more of a scale that works with multiple car models and stuff, that would be a good time for Kyte to also start exploring that further. Where, if you think about it from a user perspective, today we are already augmenting an autonomous car play in a way. So as a user, you don't have a car, you hail a car to come to you, right? Today we do this with a driver. In the future, we do this without a driver, maybe a remote driver first. And then you sit in the car. Yes, you still have to drive yourself today. In a transitory world with teleoperations, you might still do that as well. Later on, you won't do that anymore, and you just sit in there. And then we reverse the whole game at the end of the trip, where we make the car disappear again, right? And you don't. It doesn't really matter if it's a driver or if the car drives itself.
Yeah.
Does that make sense?
It does. Yeah, it does. I'm curious now that we're talking about, long-term vision and path and roadmap and, things that align with kind of the future version of Kyte and the future version of the industry. What do you see in 5 years, in 10 years, in whatever pick your cadence that's most appropriate, but in how many years does the world change, and in what does Kyte look like at that point in time?
Yeah, it's a good question. I think it's always hard to predict the future, right? And there's definitely different versions of the possible futures out there. If you think in kind of statistical terms. They're like, for us at Kyte, like we have a clear vision to become the biggest operator of fleets long term, and so that means for us it's really about like growing our fleet of cars, and by that giving more and more people access to cars when they need them, and ultimately our vision is to unlock the freedom to go places, right? We do that in a small scale today. Like we're live in 13 cities across the US, but in the future we will scale that. Like if people need that in one city in the US, like other people need that in another city in Europe and everywhere else in the world. So I do think like that, like just like scaling this up is one like trajectory. And then I think like already today we are like back to this autonomous car question, right? Like we are owning and building relationships with our customers. So we kind of own the customer relationship like from a company standpoint, and we will grow that, right? Like the technology might change. We might swap current cars with autonomous cars. We might like automate more the also maintenance of the fleet, right? We will have like parking lots that are fully autonomous at some point. So all this will happen in the back end. But I think like from a customer perspective, like things will stay actually pretty similar as today. Does that make sense?
So let's talk about that from a customer perspective, because as simple as you make everything sound, you guys have experienced some astronomical growth over the last 5 years, and part of that is due to just a really great idea in a market that was great timing, and all of that stars aligning type stuff obviously plays a role, but it's been pretty hard work too at the same time, right? So one thing I know we've talked about before is kind of the evolution of Kyte's pricing strategy and how that's played a role in your growth. So can you walk us through the evolution of Kyte's pricing strategy and what made you evaluate and reevaluate the way that you were priced to the market?
Yeah, sure. So I think like pricing is one area where which we initially underestimated in that market, right? Of people needing access to a car. This is a very like fluctuating pricing. Like you have dynamic pricing with most of the other players, while car sharing typically is more stable. All the traditional rental car players are really like dynamic in the way they price, and so. Yeah, I think in the beginning, like we kind of manually check prices on other websites and then like adjusted our pricing accordingly. But over time, we realized like how important it is and invested more and more into that and growing our own like really like pricing engine and intelligence, which starts to pay off really only now, I would say. And so, that's definitely one thing that wasn't easy. I think another thing that we haven't talked about, I think, in the past combos, but was around our like, supply model. So if you think about like how we started out, we kind of didn't have anything, right? Like we had a little bit of venture funding. But or even not that, like we had like some angel money, and we wanted to get some cars to our customers, but we didn't have cars. So I think that's where we like started out with like a super like asset light supply model, and then like kind of pivoted that into a model where we now are actually like having like buying cars. And we have a credit line with Goldman Sachs in order to do that.
So it was initially you were partnered with fleet companies, right? Since you didn't hold your own inventory, and then raised some money, partnered with some pretty heavy hitters, and I'm just curious, what in that experience shift, what challenges were you facing when you were partnering with fleet companies that made it unsustainable and was part of the reason for the shift?
For us, it was mostly the realization that this wouldn't be a scalable path towards a multi-billion-dollar company. So it did work at a small scale. And like there are partners out there that can supply a couple hundred cars, maybe even like 1,000 cars, but it doesn't scale infinitely. And so that's where when we realized that, we said, okay, we need something more scalable, right? Like finally we want to go public. We want to build a massive company here. And so the only truly scalable path that we figured out is actually owning these cars. And that's what we did.
And what was the, once you had that realization, was the path forward super easy? And you went out your door one day, you met Mr. Goldman, he introduced you to Mr. Sachs, and then all of a sudden you had, hundreds of millions of dollars in your bank account? Or was it a little bit more complex than that?
Definitely the latter. I would still love to meet Mr. Goldman and Mr. Sachs.
Wouldn't that be great?
Yeah.
So how did all that transpire?
Yeah, no, it's it definitely wasn't easy, right? And I think it's a good example of like doing things at a startup that where you play against the odds of being successful. At the time, like we were still tiny in terms of numbers. So of like cars on the road, even with our fleet partners, of bookings, customers, everything. And so like my co-founder Ludwig did a really, really good job here in giving potential investors, right, on the like asset financing side, like an idea of what this could become if they were to join the journey with us. And so like really, I think at the time, if you looked at the business, it wasn't interesting at all for heavy hitters like Goldman, but they understood that if they get in now, get their kind of foot in the door, then they can actually see something grow here really nicely and like be part of the journey from the get-go. So that's what got them excited, and was a great beginning of a really good partnership.
So they're investing in the vision of on-demand cars, right? Obviously, is part of what you're saying, and I think like that's something that I think a lot of people get lost in as they're talking to and looking at financing partners. Is they get lost in the creation of a deck and they lose the idea of dialogue, and they get lost in the idea of needing capital to finance their path forward, when really it's about investing in a vision. And it's, these concepts they may sound trivial and easy for us to talk about now that the time has passed. It really is the simplification of the complex that makes these conversations quite a bit easier. And I imagine there was a few lessons along the way of fundraising, and anything that stand out that you can share on to our listeners.
Yeah, I think generally speaking, like you're totally right. The vision is super important, but also like conveying a message that boils down a complex business like ours to something that people can understand within minutes if they're not, in the car financing business or in the operations business. So I think that is like a very, very key point here. I think another point is, and this changes a little bit over the course of the company growing, but people like still invest a lot in the people. right? So in the beginning, it's the founders. A little bit later, it's the team. And so I think that is also like highly underestimated, at least in the early days. We only I think recently realized that now, with the last year, our Series B, people really started to, and VCs started to double click into the numbers much faster, much deeper. And so I feel like it's a shift over the course of a startup where you start with the people and then you grow into people plus numbers. And then eventually, likely, I don't know, you'll see, it will be more and more of the latter, right? More and more numbers.
Sure. And so you guys are live in how many cities in the US now?
In 13 cities.
So you're not in Tampa yet. I wish you were. What cities in the US can people be on a lookout for Kyte in?
Yeah. So for us, we are our focus, start again here. For us, the focus is really to deliver the best experiences in cities that have some criterias and that fit for our model the best. And so one of these things is car ownership, for example, right? How many people do own a car? What's the density of the inner city, which makes it more attractive for delivery? So there's a bunch of factors that go into a decision to launch a new city. But generally speaking, for us, the focus currently is not necessarily to expand beyond the US. There's so many cities in the US that are attractive and fall into our rooster, that we can tackle. And so you will see more cities to come. I can't say the exact number, the exact names, unfortunately, but you'll see some more cities coming in the near future.
No problem. I'll keep my eyes open and ears peeled for any new announcements. But as of right now, you guys are in San Francisco, Los Angeles, New York City, Brooklyn, Jersey City, Miami, Atlanta, Boston, Chicago, Denver, Fort Lauderdale, Philly, Portland, Seattle, and DC, right?
Yes, that's right.
All right. And you're right around the corner in Miami and Fort Lauderdale. So, next one's going to be in Tampa. I'm counting on it, or maybe at least within the next few.
Yeah.
Yeah, maybe. Probably not big, and Tampa's probably not big enough to hold you guys yet, but we're working on it. All right, so I want to talk a little bit about where you guys are headed next, and some of the decisions that you've made around growth, and I just want to basically leave it open ended in terms of. Not necessarily city-wise, but where you guys are excellent at listening to your customers. It's impacted a lot of your growth initiatives. You've shifted pricing, you've shifted supply store, you've done so many things in the name of the customer. What other changes are coming for Kyte?
For us, it's a couple of things, right? But the main company priority right now is really focused on driving more towards profitability. In the current market environment, that is just something that makes sense. That's generally actually something that makes sense, right? Yeah. To build a company that is profitable. And I think it's especially does make sense these days. And also at the current stage of our company where we are hitting some forms of profitability already, but turning the company fully profitable will be the next really big milestone. And I think we can achieve that by two things, right? One is getting more efficient and the thing that we are doing, and two is getting more scale and just to have some more economies of scale. And doing both of these things while keeping the customer front and center. So, eventually the customer is the one driving in revenue for the company, right? So without recurring customers, you don't have a business. And so that is why that is really front and center, and we're focused on that a lot.
Excellent. Yeah, no, good things ahead. Profitability, counter to what maybe traditional tech would say, is certainly a focus across the industry these days. And I want to close things off because you've given a lot to our listeners already, but I want to close things off with our founder five quick hit questions about you and your growth. And you may lean into profitability on the first question, because the first question is the top metric or KPI that you are relentlessly focused on.
So I will choose one that is only tangentially correlated with profitability. It is on-time rate. So if you think about it, like our customers order a car to have it delivered to them at a certain point in time. And it has to fulfill some criteria. It should be the right car, it should be clean, it should be well maintained, but it also has to be there at the right point in time when they actually want to start their trip. And while that sounds simple from a customer perspective, delivering thousands and thousands of cars at the same time, right, in parallel, that can lead to like some high peaks in demand for what we call surfers, like our 1099 contractors that are delivering the cars, and also like from our operations internally. And so the whole clockwork has to really work together in order to deliver this car on time. So on-time rate is the one thing that we are highly focused on as a company. We're tracking it like every week, looking at it at a company level, and continuously driving up that percentage.
Excellent. Yeah. All right. Second question for you here. Top tip for growth stage founders like yourself.
I think we talked about this kind of like fundraising focus from, like focus on people and then like shifting more towards numbers. I think that is one thing that I've realized, and I think it's good to be aware of that shift happening and being proactive about it. I think another thing in that same realm, speaking of talent, right, is to keep the bar for talent really high. So for like what we've realized is that as the company grows, it is important to keep that bar really high. If you like get a little bit of slack in there, that kind of is at some point becomes unstoppable. And so like for us, like we really put in some measures here to have like biannual performance reviews and things like that, where we really make sure that we keep the bar really high for everyone at Kyte.
Excellent. All right. I'll make sure to keep that in mind when I get my job application out to you guys. All right. Favorite book or podcast that's helped you to grow as a founder?
I hate reading books. I love listening to books. So and that's just because I'm a really bad reader or slow reader. I think though. So I think in terms of like podcasts, because you asked about podcasts, one podcast that I really want to or like to recommend is Strategy from Ben Thompson. He is he's just talking about a daily update on what's going on in the tech world, and that is just a great source for me to like keep tabs of a highly condensed version of very like focused news in the tech industry.
Got it. No, awesome. All right, next one. Piece of advice that counters traditional wisdom. So something that counters what those in the tech world might say is traditional wisdom.
Yeah, I don't remember who said it, but I think it was one of our advisors very early on, which is when you think you need to go fast, go slow. And that has helped us definitely in the past of being very, being very conscious about taking some decisions, right? And not hurrying through. Sometimes, especially in the early days, things feel like you have to have that decision yesterday, and it's already too late.
Yeah.
And for many decisions, that's fine, right? Like to take decisions fast and iterate. Thinking about like the revolving door, one-way door concept of Jeff Bezos, and like it's fine if it's a revolving door, but if you know it's a one-way door, then like better go slow, better think about it one more time, and then take a decision.
Do you remember the context by which your advisor brought it up to you?
Fortunately, I don't know, but it became it became a recurring theme that actually like we as founders were talking about when we were having discussions about taking decisions early on. And so like this is something that just like kept coming up. So I also still remember it.
Yeah, no, it's good advice. All right, what is going to be the title of your autobiography?
I think I'm still far away from writing that. Maybe in the future,
you and me both. Yeah, you and me both.
No, maybe in the future some AI will write one without asking me or so. But no,
it could already be. Yeah, it could already be.
Oh, probably it's happening for everyone. For you as well, by the way. Didn't you know?
Yeah. Oh yeah. Yeah. You bet. So what? Let's just throw one out there. What do you think the title would be?
I think for me it would be Get Better Every Day. And so why is that the case? I think there's a lot of that kind of woven into my just like very short history in life so far. I really enjoy working on things like solving hard problems and by that growing personally, but also I think it is important to think about like how you can make the world better every day, and even if it's just like a tiny bit. So I think that would be the title that makes sense. And coincidentally, it is also one of the values at our company, and which really resonates with me. And so I really like that.
Excellent. Well, Francesco, thank you for giving so much to our listeners today. I always allow for a little bit of self-promotion at the end here. How can those help you out, help the Kyte team out on your path towards changing the world?
Yeah, if you're one of the Kyte cities, please give us a try. And actually, I think you can, at this point, you can go on the website or download the app, kyte.com, KYTE.com, and enter a promo code at checkout, which is the Dirt20, all caps for the Dirt, and you get $20 off if you want to give us a try. Excellent.
We'll send that over after, and we'll throw that in the show notes too.
Nice. Yeah.
Awesome, Francesco. You rock, man. Closing us off, what's the best way for listeners to get in touch with you? Is it via email, LinkedIn? Just go to the website. What's the best route to get in touch?
Sure. Yeah. Feel free to throw me an email. It's francesco@kyte.com. And you'll probably see that in the show notes, how you spell my name. But that's probably the easiest way to get in touch.
Excellent. All right, man. This has been a pleasure. Thanks for joining us on The Dirt, dropping your knowledge. And till next time, my friend.
Thank you so much, Jim. It was a pleasure.
Pleasure's all mine.